You know, no big pop for Facebook stock on its opening day, but as Dagan pointed out, remember, this kept getting ratcheted up ahead of the offering. Remember, they first talked about it being offered in around the 20s a share, then 30, then 32, then 34, then it was ratcheted up to $38 a share. So, you know, this is kind of the eye of the beholder. So while investors might be disappointed by the ultimate performance, market watcher Ed Butowsky says all of this is actually a good thing. Explain, Ed.
Well, what we don't want is we want markets to be realistic. And what we don't want, is for something to be a bubble. And if this stock went much higher than where it opened up, and quite frankly, I think it's going to go a lot lower from here in the short run. I think there's been some support. We do not want to see unrealistic prices. We want to see prices that are absolutely realistic in the market, and we don't want to see people getting in there and then thinking that it's like gambling. And so I'm very, very happy this thing did not pop. It's 40% overvalued, Neil. Make it real simple. Right now, the stock is 40% overvalued based on expected earnings, and I don't even know if that's a real good number. I think we're going to see this thing trade down, probably down into the low 30s over the next couple of weeks.
All right, but if it's 40% overvalued, you could make the argument that this should be worth no more than the low 20s.
Some people can make that argument, especially in light of what's going on in the world economy right now. Now, that could change very dramatically if certain things take place. About 21 days after a stock goes public, then they can start making, research reports come out and new announcements come out. So there's a quiet period still. But based on what we know right this moment, this stock is about 40% overvalued. And I'm happy that we didn't see a big pop in this right now.
You know what? There were such high expectations built into this offering, and maybe just the social enormity of it, the fact that it has 900 million users, the fact that it was so incredibly hype. It's very hard to live up to expectations like that. And I do wonder whether the company brought this on itself, or whether those who were bringing it to this day brought it upon themselves. That when you have so many shares out there, and ahead of the fact you've been ratcheting up the price of those shares, it's almost impossible to see them certainly do the double and tripling thing.
Well, it all comes down to valuation. Remember, 80% of the volume in this stock, if not more than that today, were all institutions. And institutions don't look at the popularity of a company, they look at the valuation of the company. That's why if you look at historically, the best IPOs on day one are mostly companies you've never heard of before, because the valuation that was placed on them was dramatically, was low, and the demand for it was very high. Again, the popularity does not equal price performance. And the media did get a hold of it. Everyone was talking about it. You couldn't go anywhere without talking about it, but that doesn't mean that it's going to make it for a good stock or a good, good day one, which we saw today.
All right, real quickly, if you're right on the course from here until it stabilizes is down, that would be keeping with a theme with IPOs of any sort, that they start strongly and can't, maintain that, and they sort of struggle, and then they sort of get a beachhead, and then they're off. If they're good, they're off to the races. Amazon comes to mind, eBay comes to mind, even Microsoft comes to mind.
Yeah, Neil, I'll throw in another thought. About 10 days from now, people are going to be able to borrow shares and start shorting this stock if they chose to. There's a lot of downside left potentially in this, and plus 90 days later, the lockup comes off. So I think we're just going to keep seeing a lot of selling pressure on this, and individual investors don't make stocks rise. Institutions move the market, and institutions are the ones that really don't like this company. So be careful. Buyer beware. The person who bought it at 45, I think, is going to be real sorry a couple of weeks from now.
All right. Thank you very much.